Hello and welcome to Rachel Rogers TV. I'm Rachel Rogers and today we're going to talk about a very common question that I get all the time. This time it was asked to me by one of my clients. Here's what she said. I have an embarrassing question. What do I do if I've been commingling my personal and business transactions? No need to be embarrassed, my friend. While this is something that is very common, it doesn't mean that it's okay, right? We want to do better than common. And there are some very easy ways to fix this, and we're going to address the exact issue that business owners always get hung up on and why they wind up commingling their funds. First, let's address the why. Why does it even matter that as a business owner you keep your business and personal finances separate? Well, two big reasons. One is that you significantly lower your tax bill, and we like lower taxes, right? You also significantly lower the potential liability that you have as a business owner because business is risky, isn't it? And so this will lower the potential lawsuits that you have. Seriously. So let's break that down. Limiting your liability means that you are lowering your chances of getting sued, which is very important because business is risky. One of the ways that you limit your liability and limit your exposure to potential lawsuits is by having a proper business entity, right? Either an LLC or an S Corp. Your LLC or S Corp serve as the Great Wall of China between you and your business, right? So that means that it keeps all of your personal assets on the safe side of the wall away from your business risks. So that means that your home, your savings and retirement accounts, and any other personal assets that you have are kept safe by having this wall between your personal assets and the business. However, if you are mingling your business funds with your personal funds on a regular basis, that great wall comes a crumbling down, okay? And now your personal assets are at risk. So if a debtor or a disgruntled employee comes to sue you, your personal assets are now at risk. This is something we want to avoid like the Black Plague, my friend. Business is risky enough without adding more risk by commingling your business and personal finances. Plus, added bonus, separating your business and personal finances means that you have good, clean records when tax time cometh. Good, clean records means that your accountant has an easier time finding all of those deductions that you are entitled to. That not only lowers the hourly rate for your accountant, but it also lowers your tax bill. Say it with me now. Deduct, deduct, deduct. Now you know the why, so let's talk about the how. To get started, what you want to do is start with a business bank account for your LLC or S Corp, right? So you're going to open a business bank account in the name of either your LLC or your S Corp. And you want to do the same thing for PayPal if you use PayPal for your business. Also, if you have a credit card for your business, make sure it's in the name of your actual business. So all of your accounts related to your business should be in your business's name, and all of the accounts related to your personal life and your personal income and expenses should be in your personal name. It's not exactly rocket science, is it? But here's where business owners get tripped up. When your business needs to pay you, as in your salary, or when you need to put money into the business, for example, if you're making an owner contribution to invest in something awesome for your business to help it grow, right? That's where business owners wind up getting stuck. You need some extra cash to cover the business expenses this month, so you whip out your personal debit card and you pay them, right? Bad business owner. So what should you do instead? Instead, what you should be doing is make a transfer from your personal account to your business account and label it owner's contribution. Or write a check from your personal account to the business account and record it as a loan in your annual minutes. You can certainly make personal contributions to your business, from your personal finances to your business account. Absolutely. You just have to be careful about how you're recording it. You always want there to be a paper trail. Yes, it's an extra step, but I promise that it's worth it. You're going to do the exact same thing when you need to pay yourself. If you want to pay yourself a salary, then all you have to do is make a transfer from your business account to your personal account and label it as your salary. For example, in my own business, I label those transfers as RR salary. Likewise, you can also write a check from your business account to yourself and then deposit it into your personal account. Again, this is an extra step, but you always want to be recording when money is going out of your business or coming in and for what. right? So you don't want to just withdraw money from an ATM and then no one knows what happened to it. You want it to be very clear how much you're paying yourself and when. So that solves that problem, right? Now, if you aren't using a bookkeeper and an accountant, then I highly recommend that you get both, okay? Very, very important. Your accountant will make sure that you can take advantage of all deductions available for you so that you can keep your tax bill affordable. And your bookkeeper will ensure that you make sure that you are doing those transfers appropriately and labeling all of your expenses. Having good, clean records and good, clean books is very, very good for business. So remember to never commingle your business funds with your personal funds to keep your taxes low and to keep your liability limited. Say it with me now. I will never commingle my business funds with my personal funds because it's more tawdry and inappropriate than a paperback romance book cover. This is the part where I plug my new subscription-based program, Polished. Polished is a way to get your legal questions, just like the one that I answered today, answered whenever you need them to. It's a subscription program. You'll pay on a monthly basis and get access to me and my legal team and a variety of other benefits as well that we'll tell you about soon. The pre-launch begins July 15th, so sign up at rogerscollective.com/polish to learn more. So that's all I have for you today, folks. Thank you so much for watching Rachel Rogers TV. If you enjoyed this video, please share it with a friend. And if you never want to miss an episode of Rachel Rogers TV, just use the subscription box below to subscribe. I will see you next time. Bye-bye.